Welcome to the last of the series of Flow of Money. Last week we hypothesised that if we reduced the expenses to $38,000, we'd have a $2,400 excess that we could deal with. If we invest that $2,400, the modelling looks like this. It's getting a little bit complicated here. But nevertheless, investment yields a return which adds to your income, so you can see that we are starting to build a virtuous cycle we discussed in the second of this episode. So that's it complete with all the details. Let's just pull out that virtuous cycle. There you can see that we've got $2,400 worth of excess in investment, which pays us an income which increases the income that's flowing. So therefore, over time, that $2,400 would believe. I believe that before you actually channel your money into an investment of this type, you need to have fully settled your non-deductible debt. And of course, $2,400 isn't enough to give us any form of financial independence, as we've described in our earlier episodes. When the passive income is enough to meet our spending, plus enough to protect our investment against the ravage of inflation, then we've used the flow of money to create wealth. Not working because you've achieved financial independence may have a negative effect on your health, so balance is needed here as well. Maybe you could produce a television show to keep yourself interested. This is the end of the cash flow segment. Hi, welcome back. We're joined by Stuart, who's going to help us with the reverse interview. Hi Stuart, thank you for joining us.
Hi Kerry, nice to be here.
Yeah, no, it's not a problem. Now you've seen the first couple of segments in relation to risk.
Yep.
Do you have any questions?
You've spoken about internet insurance. Would that be cheaper?
It's a fallacy, isn't it? You would think it would be.
Yeah.
You haven't got people involved and there's not so many profit centres. So theoretically, where your standard insurance, the advisor who organises it for you gets paid, you'd think internet insurance would be cheaper.
Yeah, you would. We
did a show earlier in the last season and I had some figures, so I remember them. They're probably a little wrong. So $500,000 for a bloke your age as an electrician.
Okay.
If we go to all the mainframe insurers, the range was, I don't know, $28 to $34. We go to the internet, $80.
Why is that?
$56, $52, and the cheapest was $42.
Why so expensive?
Well, there's a couple of things there, right? The first is they're offering automatic acceptance. So you've got a heart condition, you've had it since you were a kid, you've got a hole in the heart, you rock up and you get automatically accepted for insurance. Yeah. Somebody's got to pay for that, and it's the people who don't have a problem. But even then, even though they'll offer you the insurance, then they'll exclude existing conditions. So it's flawed. I suppose you'd have to say it's profit margin.
Yeah.
But it's all pricing. So, you know, you offer a benefit, it has to be paid for. If that benefit has no value for you, you're wasting money.
Okay.
So I come back to the same thing I've said many times, and that is that if you want insurance advice, go and seek an advisor. They'll work most frequently for the money the insurance companies will pay them when they place the insurance.
Yeah.
So what it means is, for somebody like you, if you're unsure about what insurances you needed or what value of insurance you needed to cover yourself for, use an advisor and it won't cost you anything and you'll get good advice.
Oh, thanks.
And a cheaper product.
Well, that's the most important thing, isn't it?
Yeah. Or have a dad who's in the business.
Yeah. Well, that helps too.
Good on you, Stuart. Thank you very much.
Thanks very much.
Look, reverse interviews are always good. Stuart is no exception. I think he's asked some really good questions. You know the story. If he hasn't asked the questions you wanted, go to the website, ask a question on the blog, have a chance to win an iPad. I mean, it's all good, isn't it? Okay, we'll see you next week. We'll be talking about estate planning.